Somewhere over here, we've got the bubble for Hedera hash graph for the HBAR token. It's not one of those green bubbles. This is what everybody else is focusing on. Everybody else buys the trending things, the things that go up a lot that might then afterwards come crash down. That's the problem, right? There is correlation between attention and price. We rather want to buy the thing where there's not a lot of attention. Now, HBAR is over here, a very small bubble. It has not outperformed in the last week. But maybe that's an opportunity. In the end, it's still the 23rd largest cryptocurrency with 5 billion of market cap. The project used to be called Hedera hash graph. Now it's just Hedera. It's pretty much the opposite of Bitcoin. Bitcoin is trustless, where we want to get around institutions. Hedera hash graph tries to leverage the trust in institutions. Now, very long term, the price development has not been phenomenal. We are currently at 11 cents. Yet the attention on the last video, and it's a long time ago, it used to be very high. This was a video published 408 days ago, and it got multiple times more views compared to the average video on this channel. Now, there's a strong fundamental misconception with the altcoin market. What we see over here, that's the others dominance. How much of all of crypto is in the altcoins that are not in the top 10, and Hedera is within that. This graph suggests that over the last 9 years or so, the smaller altcoins pretty much performed according to the general market. So relative to Bitcoin and Ethereum, the same kind of performance over the very long term. But have a look at the performance of the altcoins listed on Binance in the last year. Yes, Bitcoin didn't perform phenomenally, right? It lost 4%, but it did not lose 80% or 90%. Just have a look at those percentage changes, right? It seems to be much, much worse. So where is this coming from? The answer is token inflation. We've got more and more tokens that hit the market. There is expanding supply, maybe because of staking unlocks, maybe because of vesting unlocks, right? The early investors, the team, they get their token allocations that then over time get dumped on the market. And that's very, very aggressive, right? We tend to see hundreds of millions of new supply every single week. And so that also impacts Hedera. Have a look at the market cap over time. It used to be at 20 or 30 million and went all the way up to 5 billion. So that's a 25x in terms of market cap. But have a look at the price development. It's far away from a 25x. And the only reason for the difference between the market cap development and the price development is the tokenomics. It's the number of tokens that circulate over time. Still to this day, I believe that the majority of crypto investors is not focusing on tokenomics enough. In the end, it's all a game of measuring demand versus supply. And we do know the future supply through the tokenomics, but we then have to estimate whether or not the demand will grow more or less than the supply. If the supply doesn't grow at all, then it's great. Just a little bit of additional demand will push up the price. But if the supply grows relatively aggressively, we've got a quite high hurdle rate to overcome for our demand in order for the price to go up. And so because of the increasing supply of HBAR over time, we've also seen its price underperform. It's by 86% since 2019, and this time we are comparing price with market cap, so a lot of this is just token inflation. What we can also see though is that there are quite erratic price movements every now and then. Sometimes the price can rally by more than 100%. In this instance here, it even rallied by 460%. So what's going on here? Why do we sometimes see those sudden price spikes? It's because of short squeezes. So enough people are betting on falling prices. They see the overarching bearish trend. But then some market participants buy up the HBAR supply. They push up the price short term to liquidate everybody that's betting on falling prices. And that's a dangerous game. We do not want to be involved in an asset that sees that much manipulation short term. Unless, of course, potentially that manipulation can be in our favor. So instead of opening a short position right now, if we are bearish on HBAR, it might make sense to open a short position that's maybe 50 or 100% above the current price. And then just hope that there will be a market maker one day that squeezes the price again, that we can then get an entry for that short position at an elevated price and then make money as the price deflates again. So that's the way to counter market manipulation like this. Had you entered a short position, not directly at the market price, but say 50 or 60% above the current market price, you just had that order lingering around on the platform, you would have gotten an entry point to bet on falling prices over here, and you'd be in profit very, very quickly. Of course, together with that short position, there should also be a stop loss, because we never really know at what point a short squeeze turns around. Now, maybe the current long-term bearish trend for Hedera could turn around, because if all of the unlocked supply has already been sold, maybe there is no more selling pressure. Again, we are currently here, and this is a history of the unlocked supply over time. Hedera had a massive liquidation event for all the people betting on rising prices, right? It went down by 66% on the 10th of October. Many altcoins went down, but not by that much. The average altcoin went down by only 48%. That caused many long investors to lose everything. So there was 37 million worth of liquidations on that day. And so the average funding rate went from clearly positive to rather being neutral. Sometimes it's positive, sometimes it's negative. And so yes, there is the potential that we see a short-term rally, another short squeeze. The open interest is very low, and there is correlation between the spot price and open interest. When there's more speculation on the perpetual futures, on the levered bets on the price, that's also when the price itself is high. When there's less bets on the price, that's also when the price tends to go down. So the amount of bets and the spot price itself is highly correlated, and it's currently very low, and it will shoot up in case we see another short squeeze, another rally like this. It is dangerous though to just buy in order to speculate on a rally. I think it's better to just see HBAR for what it is. A token with a troublesome history, a token with a historically expanding supply where we do not know how much of that has already been sold. And I think there is a good chance that maybe we don't hit all the way to the all-time low, but we'll at least go another 30 or 30% down from here, potentially with a short squeeze before reaching those lower targets. And again, that's the potential opportunity. We want to bet on the overarching trend, but not fall victim to short-term market manipulation. If you want to know what kind of trades I personally make, then you can of course also check out the premium membership. This is where I share everything that I do. The link pops up here on the screen. Thanks again for watching. See you next time on YouTube as well. Cheers.